This video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at this week's Midweek Market update, shall we? Kind of a quiet one in general, aside from the excitement regarding Celsius, who continues to unwind trades or unwind illiquid positions that they got caught out on over the past few months, namely this staked ETH trade where they have appeared to have been able to unwind it, most likely OTC. A lot of this is speculation. We don't really know where exactly this is going, but it looks like some sort of OTC vehicle, perhaps FTX. Don't know for sure. Rumors about Coinbase as well. So I don't think anybody knows just yet where this is going, but the first step was reclaiming it, which they've done successfully. And for those curious, we can look at their wallet. This 0x8ace wallet is associated with Celsius, is a known Celsius address. See, at one point in time, according to Xerion, this potentially had 3.8 billion associated with it. These calculations are kind of rough in general, but very likely the Celsius address based on all the on-chain evidence. So you can see currently what they have in here is 10,000 wrapped Bitcoin. Wrapped Bitcoin doesn't have that issue between the bridgeable BTC or the ETH equivalent BTC and actual BTC. It pretty much holds at 1-to-1 value, whereas the staked ETH has not as of late. And that's really why Celsius got in a lot of trouble, because they were going to take a bath to the tune of 5% or more, or just flat out were unable to unwind that completely. And here are all of the transactions, just all of them that were done today. And you can see down here, they unlocked that staked ETH, looks like through Aave, so they repaid that back. And what they were doing isn't uncommon throughout DeFi, but they eventually ran into liquidity problems. Ideally you're getting yield on yield on yield from their perspective, whereas maybe somebody else with better risk management wouldn't put all their eggs in one basket, perhaps. But it's good to see that unwinding. So a lot of the market reaction to that, I think, is happening currently today, over the past couple days, as this is potentially being sold or unwound OTC or otherwise, right? If this is being liquidated to cash, it doesn't just magically go to cash, right? It hits the market in some fashion. And looking at on-chain activity for Bitcoin, not too much to really comment on. We're flat, we're holding levels, we're not going to zero as far as on-chain activity is concerned. Certainly up significantly based on transaction counts since inception. ETH as well, transaction counts holding up quite nicely after declining really ever since the all-time high. Transactions are picking up again slowly. Now, this isn't indicative of the end of the bear market or anything, but it does tell you that there are still people transacting here, regardless of direction of price. There's certainly plenty of activity going on for Bitcoin and Ethereum. Active addresses, these are addresses that have changed in value over the previous day. Again, another way just to measure activity for Bitcoin and Ethereum. Holding levels, we're not falling off a cliff. Certainly plenty of activity going on here. Ethereum bouncing back a little bit on that activity front. So certainly declining from all-time highs, but we're not in a situation where no one is using the chain anymore because of price. Another interesting stat I saw this week from Glassnode was the relative address supply distribution of addresses with less than a Bitcoin, or a Bitcoin or less. And it's continuing to tick up. So this tells me that people are continuing to stack sats, as they say. People are continuing to sort of trickle their buys. At least that's how it appears based on the on-chain evidence. It appears as though the smaller addresses, which they call shrimp, continue to add to their pile as we tick lower. Now, this could be a lot of different things, not necessarily organic. It could be the way wallets are distributed on the exchange side of things. A lot would have to go right in order for this to be one specific exchange. A lot can happen, right? There's a lot of caveats, as always, with on-chain data, but we are seeing upticks in those smaller wallets. Something else we're still seeing is a decline in Bitcoin held on exchanges, which makes sense to me if there are custody issues that are broadcast widely that, hey, not your keys, not your coins, get your coins off exchanges, right? If there's issues with solvency, it makes sense that this is declining still. In a bear market, we typically see rising exchange balances. And in a bull market, we typically see falling exchange balances. Not always a one-to-one correlation, but just something we typically see. So it is a bit unusual. We're continuing to see declines in Bitcoin held on exchanges because the idea is here that as prices fall, more people send coins to exchange to sell. We're not necessarily seeing that. Now for ETH, we are starting to see that a little bit. We're starting to see ETH balances on exchanges pick up a little bit. Now this could be a lot of things. Again, it's not always as simple as, okay, this is capitulation. People are perhaps sending coins from DeFi back to centralized exchanges as the DeFi excitement has winded down a little bit. But ETH sitting on exchanges still remains quite low historically compared to where it was even at the COVID lows, in March 2020. The bottom in price in that case did correlate with an all-time high in ETH sitting on exchanges. So, on a relative basis, it makes sense, right? ETH comes home, as I like to say, as price is falling. ETH goes out to play as prices are rising. It either sits in a wallet somewhere off exchange, or it more likely than not goes into the DeFi ecosystem. Bitcoin's hash rate on the mining side of things has quieted down a little bit. Hash rate's pretty volatile up here. It's an imperfect metric as it is, but we've yet to see these large declines in hash rate, really that we saw in 2018 when price collapsed in a big way. This is what it looks like when an entire country, in this case China, is banned from mining. We saw a significant dip in hash rate at that time as well. So we've yet to see that week over week decline. And the reason for this decline would be miners who would no longer be at break even or above, miners who at that point would be underwater, and it wouldn't be worth it for them to mine. We are seeing some miners come offline in Texas, for example, as they're curtailing power in response to grid demand. So there's many more variables now in the real world side of things than maybe previously, with all of these industrial miners in various places in North America now. But I would still expect at some point in time to see hash rate come off a little bit more than it has if miners are truly in stress conditions or stress periods. Now, ETH's hash rate is falling for a different reason, aside from just a decline in profitability. As fees come down, as price comes down, ETH is also transitioning to proof of stake eventually, potentially this year, which means there will be no hash rate whatsoever on Ethereum. And we're seeing the GPU market supply increase rapidly. So that likely means the GPU miners that were being used in ETH are now being sold before they become less valuable than they already are, because you won't be able to mine on Ethereum anymore. So this decline is both price related, profitability related, and end of days for ETH mining related. And as far as layer 2 capacity for Bitcoin's concerned, this is the Lightning Network. That continues to tick up. This works like a debit system where you have to sort of deposit Bitcoin into the Lightning Network in order to participate. So the ability of the network to transact is a direct function of how much Bitcoin sits in that network. So it's good to see that continuing to rise. It shows there's continuing use or demand for that in LN. Even, again, regardless of price, you're still seeing layer 2 capacity go higher and higher. Now it's sitting at an all-time high. One other price-related thing for Bitcoin when we're talking about tops and bottoms relatively, MVRV has always been at the top of my list as far as things to watch when you're looking at overbought, oversold. MVRV is a measure of market cap versus the cost basis of all the coins, or the average cost of coins moved on-chain. And when market cap is several multiples above the cost basis, that's typically overbought conditions. And when the cost basis meets the market cap, that's typically when we see or have seen oversold conditions. So we're currently definitely closer to that oversold territory historically than overbought. Doesn't mean this will be a low, doesn't mean it can't go lower, right? But it does give you a pretty good sense of what has happened historically, even before this metric existed, how price behaved. And I can't not talk about legacy this week because we continue to see correlations with S&P, inverse correlations with DXY. And, you can play around with the duration or time frame of the correlations, but we're still very high on BTC's correlation to S&P, BTC's inverse correlation to the dollar, depending on the time frame. We are sitting very close or at all-time lows at this point in time. So to see DXY scream higher, 62% of this is the euro. It is an index, but to see the DXY scream higher certainly doesn't bring a bullish expectation for me on Bitcoin's price or ETH's price or crypto in general. Typically, we've seen Bitcoin's price do best when DXY is weakening, not strengthening. So when it's strengthening beyond multi-decade highs, it makes sense to me that we're pulling back aside from everything else that's going on within crypto, or that is crypto specific, like Celsius or crypto lenders. It makes sense to me that we have these additional bearish headwinds with DXY. And if we zoom way out, let's take out the litmus test. Let's look at the 20-week moving average. Historically, very good at telling you what's going on. And there's no question here. We are below the 20-week moving average. No question this remains bearish. The question to ask now is how far can we push below that mean, should it matter, before we attempt a bottoming period, attempt an accumulation period, or buyers and sellers sort of meet an equilibrium over an extended period of time. That's typically what we've seen in 2015 and 2018. Where is that going to be? I think right now it's very clear we're seeing greater selling than buying based on declining prices, based on forced selling coming out of places like Celsius. So again, it's no surprise to me that we are more bearish than bullish. Certainly ETH as well, same thing. You can see it follows that 20-week MA quite nicely historically, and we are below it. We are far below it, and we are continuing to push below it. Something else to watch if we're zooming way out for Bitcoin would be sort of lines of best fit. This is called the power law corridor. And again, we're looking for historically, how has the left side of the chart looked relative to the right side of the chart based on the current price movements, current price action. This does give you a general sense of price appreciation over time. It gives you a sense of where those lows have liked to live, where the highs have liked to live, and where we are now. So I look at this and it tells me, okay, much like MVRV, to me, we're closer to the bottom than the top. I look at things like this, we're at the 200-week moving average, which historically has been an important level. We've never lived below it for this long, so that certainly is a problem. We're treating it as resistance now, which is potentially a problem. And the 200-day moving average has never crossed the 200-week, sorry. Kind of some weird MA dynamics there, but again, that just goes to show you we've never been held below the 200-week for an extended time. This is also the 2018 all-time high at this price point. And we're also still within these diagonal levels. If you want to draw this as some sort of trend channel, but this is a pitchfork, we're still definitely within the boundaries of this. So again, there's no question to me that in the near term, we are bearish. The question I have is how long until we find an accumulation zone? How long until we start to make that range before making continuous successive lows? Certainly a big problem. ETH as well, same thing. Again, a lot of this pointing to a specific event or what's actually happening on chain. We were setting up for quite a nice W double bottom, as the technicals would have it. And over the past 3 days, it's been straight selling. And again, for ETH, at similar levels, well within similar trend channels. So nothing is really out of the question here as far as lower lows are concerned for Bitcoin or ETH, just based on trend. Here was the trade setup on Bitcoin. This is what's known as an Adam and Eve. You see this V and this U, and what you want to see from there is a breakout above that level. Certainly not the case. And to me, this looks reminiscent of 2018 on a much longer duration or higher time frame, where we had this similar Adam and Eve sort of fake out breakout situation. Maybe it's just pareidolia for me, right? Maybe I'm looking for things and seeing things that aren't there, but the structure of the fractals look certainly very similar to me. So bottom line is, as long as DXY is screaming higher, I don't think we do very well on the bullish side of things in the near term. And as long as Celsius or other crypto lenders are still unwinding leverage or capital in a manner that is for selling, probably based on restructuring. Again, I don't really know the details there and what's going on exactly, but it does look like those funds are being sold via OTC means. We'll probably just see continued bearishness in the near term. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.